right, welcome everyone. This is the weekly outlook. We're going to break down GBP, JPY, and gold. As always, go through the fundamental analysis and then technical analysis with Stefanos.
How's it going, guys? Hope everyone's having a great week, great weekend. Let's break down the charts, get into some fundamentals, and see what we got going.
Yeah, so it'll be quite brief. I mean, all the investors, they've been looking at the Freedom Day when it comes to the UK. So the very first thing that I actually want to go through first is some of the monetary policy side and also where the central bank's thinking. And very first one that I want to go through is Bank of England, and I'll show you guys a little bit of comparison with what's happening at the Fed as well. So we're seeing that the UK and US pretty much are on the same exact track, and majority of the other central banks too, when it comes to pulling back any support that they've provided into the economy, monetary support specifically. So here we have Bank of England's official policymaker saying that he still remains opposed to bringing back any stimulus for the economy because the UK still faces headwinds from a tighter fiscal stance and from a surge in the Delta variant of the coronavirus. This is the same exact thing that we've seen from Powell last week. So when we had Powell, giving his speech in front of the House committee and then also the Senate, he was doing the same exact thing because he was drilled down onto inflation. And so let's this one right here. So he was drilled down onto inflation 2 days in a row, and he kept saying the same thing, that as a central bank, our goal is to remain on an average of around 2%. We know right now inflation is going up, and both of the central banks, the Fed and Bank of England, they're both saying the same exact thing, that inflation is increasing because now the economies are starting to open up again, right? And that's just a side effect of it. It's just temporary. And, of course, we know that inflation is very high right now, and we're not comfortable with it either, but we just know that this is temporary. So within the next couple of months or so, they're already expecting inflation to come back down a little bit after the economies have opened up, and jobs are coming back, people are getting employed again, the labor markets are strengthening a little bit more. So that's pretty much the same exact sentiment that we're seeing from Bank of England's policy maker, saying that the UK, it's too early to pull back any of the stimulus at the moment. And that's exactly what Powell is saying, that it's too early. We cannot increase interest rates right now, even though inflation is increasing, which is completely fine. But if it does continue, above 2% for about 2 months, 3 months, 4 months, 5 months in a row, then we do have the tools to bring back inflation into control. Before they increase the interest rates, they're going to have to pull back on any stimulus assistance that they've provided, right? Any of the loans that they're giving out to people. So that's the same exact thing that we're seeing from Bank of England. So we can kind of rest assured as investors that they're not going to be increasing interest rates anytime soon. But the uncomfortable part as an investor is, well, you're saying you have all these tools, but how are you going to implement them and make sure that the economy doesn't, go back under a lockdown, or you don't go into a recession, or the central bank doesn't have to step in again and provide that economic stimulus again, right? So that's the question.
And that's that tricky spot that they're in right now, where if they increase
Exactly.
it, there goes the market.
Exactly. And so that's one thing that they have to be careful of. And so, some things that they are taking into account is obviously oil. We've seen that oil prices have been increasing, and they're saying that this is going to boost the CPI above 3%. And again, these are things that they're aware of. These are things that they're already kind of identifying, recognizing, and putting it out there beforehand. They're like, we know all this stuff. So there's no need for you to freak out as an investor, as a consumer. We know this is going to happen. We're going to tell you that it's going to happen, but just understand that it's temporary. So that's kind of the sentiment that we're seeing right now. Of course, we have the big reopening in the UK, and that was supposed to be, a huge optimism for GBP pairs. And we did see that, getting priced in to a certain extent leading up until today. All of last week that we were trading on GBP pairs, it was pretty much the market sentiment leading up to today. And over time, we started seeing that how that optimism started getting dominated by the market fear and the market uncertainty regarding the cases. So they're still reopening the economy, and Boris Johnson is still stepping in and saying that, you don't have to wear your mask anymore. You don't have to socially distance. But as cases are increasing on the local level, on the ground level, you're starting to see all the city mayors coming out, and they're like, well, if you're going to travel in London, you're going to have to wear a mask on public transportation throughout your journey. If you don't do that, then we have officers, we're going to take all these actions, whatever it is. But all the optimism that was led up to today kind of got clouded over by the fear when it comes to cases increasing. There's also a 10-day isolation if you come into contact with someone who tested positive with COVID. Yes, jobs are opening up in public transportation industries, but there's not a lot of people who are willing to take those jobs right now because they're scared with that 10-day isolation, with cases increasing, Delta variant increasing, and all of that. So that's pretty much what this article is about. We're not going to go too much in depth with all the articles, but I'm going to give you guys like kind of a gist of it, and you could come back and take a look. But that's pretty much exactly what this article is saying, that the coronavirus restrictions expired in England on Monday, a moment that was meant to herald the full reopening of an economy battered by its deepest recession. But lifting of curbs came against a fraught backdrop of surging infections. And so a lot of mayors, a lot of other officials, they're still stepping in. They're still saying that we're not sure if we're comfortable with the economy reopening at the moment. And then you have somewhat of optimism, but again, this being clouded over by that market uncertainty and market fear, where the UK is going to give COVID-19 vaccines only to the most vulnerable children. So these are people who live with at-risk adults, or who have neuro disabilities, who have some other disabilities. That's who they're going to give the vaccines to. So they're slowly kind of increasing their group of people that they're targeting with the vaccines. And people are saying, it's a great thing that you're vaccinating children, especially as schools are opening up and all of that. But still, there's still a lot of uncertainty and market fear around this. Another thing, as things are starting to open up in the UK, obviously the UK government trying its best to kind of stabilize the economy. Now the US is stepping in and they're raising their UK travel alert as COVID mars Freedom Day. So Americans are being told that you should avoid traveling to the UK because of the surge in the nation's spread of COVID-19. So that's another market fear that's affecting GBP pairs, majority of the GBP pairs. So that's the macro fundamentals that we're looking into. So far from a fundamental side, GBP is still looking pretty weak when it comes to monetary policy statements. You're still in that accommodative mode. You still have half of the Bank of England kind of split between we should be tightening policies and the other half saying we shouldn't. Same exact thing in the US, right? So nothing different at all. And then reopening, which is supposed to be, a great thing. Economy's opening up, right? Businesses should be flourishing. But again, there's a lot of people who are saying we don't think we're going to be going back to physical locations, workplaces, until maybe September, when things calm down a little bit more, right? So all of this is getting kind of clouded over. When
Did
it
you
comes to,
did you see
go ahead.
some of the Brexit stuff stirring up again?
Yeah, so there's a lot of things that are still happening with Brexit. I could also, go into that if you like, but it's the same exact thing where the EU and the UK, it's the same fight that's going back and forth,
It's always gonna be going on.
right? Especially with Northern Ireland,
Yeah.
especially that point. So that's where a lot of, again, GBP supposed to be strengthening. It has been strengthening for the past couple of months, primarily because of the market sentiment that it's a leader in mass vaccination. It just got done with Brexit. Things were supposed to be going smoothly, but now as things are opening up again, and then post Brexit, all of that is kind of weakening. Did you want me to go a little bit more in depth with the Brexit? I could pull up some articles.
No, I just wanted to see if you were kind of aware of what was going on with that. I know, we had that massive drop, that massive bearish candle today on the daily from typically yesterday, but yeah, I was just checking to see if you were aware of it, because I scrolled over an article, I didn't read through it, but I know, this is always going to be going on, guys. When it comes to the EU and the UK, it's just going to be an ugly divorce for a long time. But whenever things stir up, you're going to see GJ start to take a little dump.
Right, and we're going to continue to see this until London specifically starts to bring back its position as one of the top financial hubs. Right now, London is kind of struggling with it. It's fighting against like a lot of the financial hubs in the EU itself. And that's the battle that you're seeing right now, because the UK has been kind of used to, I guess you can say in a way, so not majority of it, but some part of it, been dependent on to the EU single market. That's where it's had a lot of its clientele and all of that. And now it's having to switch back. It's having to like kind of stand up on its 2 feet and then reach out to other allies instead of the EU, because the EU is not going to budge whatsoever when it comes to any terms related to Brexit, especially
Yeah.
Northern Ireland, which is always going to remain a topic of conflict.
They hold the leverage.
Right. Absolutely. You know, this is where we have the NPC member speaking. That's from Bank of England, right about here. And so now going into the rest of the week, what we're seeing is again a kind of from a fundamental perspective, a little bit easy London session. You don't have much coming out besides some pre-London Euro news, German PPI, and then you have current account. And then going into the New York session, we have building permits, housing start. So again, a very easy start to the week so far, nothing much. And then as we continue down, you have the monetary policy meeting minutes from JPY, and this is from the interest rate policies that came out last week, where they still maintained the interest rate. So across central banks, you're seeing the same exact sentiment that we know inflation is increasing, especially in Japan, where they have the Olympics right now, but the cases are still increasing, and that's why they're having a spectator-free Olympics, right? So that's one thing that's happening there. But even then, they are finding cases within the Olympic Village of COVID positive, and a lot of other cases just general related to the Olympics. So they're still going to be, you know, maintaining their interest rates until things start to get better, especially with vaccinations there, until they can pick up their progress a little bit more when it comes to vaccinations. It did slow down in the middle a little bit. So that's the macro fundamental side. So nothing much happening so far in the week. And then you have on Wednesday and Thursday, you have a JPY bank holiday. So I do expect Asian session volume to slow down a little bit those 2 days, especially. And that brings us right into Friday with the PMI news. So if you're trading any euro pairs, we're not going to be breaking those down today, but you know, you want to pay attention to the interest rates that are going to be coming out on Thursday. So about 15 minutes before New York opens up. And then you also have unemployment claims on Thursday in New York session, and crude oil inventories if you're trading anti like US or USD CAD. Friday, or actually Thursdays, yeah, Friday's pre-London session, and then Friday's entire session. That's where you want to pay a little bit more attention, because in Asian session you have consumer confidence, and then that's going to take us into the pre-London session of retail sales, and then after that you just have PMI news. You want to pay attention to this PMI news specifically because it's flash manufacturing and services. The final one doesn't tend to, you know, make that much of an impact, but flash does, right? So you want to pay attention to that. And same exact thing for USD. So for all three major pairs, Euro, GBP, and USD, you want to pay attention to Friday. That's going to be more of the fundamental heavy day. All right. Are you
Absolutely.
ready for the technical analysis?
We're always ready, Sharma. We'll start with GJ over here.
Mm-hmm.
All right. So starting with the monthly over here, obviously you guys see the bearish trend that we've been in for the past, couple of weeks over here. But as we always point out, I'm sure, the same people that watch this every single week. Maybe we get one new person, a couple of new people, but over here, as you guys can see, we are in a multi-year downtrend.
Mm-hmm.
And right now we are actually reacting to that area right over here, just like we broke down last week. But more recently, we have been in this bullish trend since March of 2020. We had
Mm-hmm.
that recent little tank, I guess you could call it, but we never broke the lows and we never closed below the lows that were created down from Brexit right over here. And then we especially never broke the lows created from the 2008 market crash right over here. So we're just going to mark that off. Again, like I said, I think most of you guys watch this every week. So you're pretty familiar with the way we break down our charts. But again, from the Brexit tank over here, we came all the way down to 128, formed that support, corrected a little bit, had that, sellers came out, buyers took over a little bit, and then we ended up coming right back down to retest that low, came right back up, and then COVID happened. Ever since COVID, we've been in this bullish trend. But if you guys take a look over here to the left, after the 2008 market crash, we come all the way down to 120, 117. We end up entering this corrective phase, come right back down to retest that low, and then we continue all the way up into 195 before we end up, they announced Brexit, what exactly what they wanted to do. But right now, the reason I point that out is because after retesting these previous lows, we entered this corrective phase coming all the way up here, right? What are we doing over here after the COVID tank? We're in that corrective phase. So we're kind of in this area over here where, we're in this corrective phase. Looking at the monthly, these monthly candles look a little awfully similar to these over here, don't they? So again, obviously everything is based off fundamentals, and fundamentals are the reason why these moves are happening. So for us to turn around and do something like this, you're going to need some hawkish, talk from the MPC and everything out of Great Britain for them to say, okay, we are actually going to start increasing interest rates. We're going to stop the bond buying. And that's when you're going to start to see this massive rally up we could very well come right back up to 195, 200
Yep.
to retest these levels. But first, we need some of that stuff to happen. But again, we were in this massive bullish move all the way up to 156, 155, as we said we were going to expect, or as expected. We've been talking about this for months. Price ended up pushing all the way up to 156, creating this resistance, meeting the multi-year downtrend, and now we're continuing down. We filled this previous wick, and now we're coming back into this area over here. Looking at the weekly, if you look over here to the left, you have these candle body highs over here, and we're just going to mark off. The price is now retesting after creating the support at the previous candle body highs over here to the left. So now we're in a very critical area. Again, you have multiple things going on with Great Britain. You have the Delta variant that's obviously going around the world. You have inflation coming in, and you have some of this Brexit stuff sneaking in as well. So that's what's pushing GJ down right now. Plus, you got a little strength in the yen as well. So let's see what we're doing in this area. Let's see if we can get any sort of play over here on the lower time frames. Do you have anything you want to point out before we continue?
That's about it. I mean, from a fundamental side, you got it. We need, that hawkish sentiment coming up from the central bank. But for that to happen, we need to pay a bit more attention to the retail side, the manufacturing side, and especially the consumer side. When we can start seeing those confidence levels picking up, that's when we're going to see the central banks saying, like, okay, we can start. First, they're going to start with pulling back any of the assistance, and then it's going to be increasing interest rates.
Absolutely. Absolutely. So, ever since tapping 156, we've been printing these lower highs over here. And now we've been respecting this kind of trend over here, printing lower highs, coming all the way down to create a new low, coming right back up, kind of consolidating, retapping that area, and then creating a new low, right? We came right back up to retest this area, and then we crashed, passing the low of these candles over here. Now we're in a very critical area. Now we're retesting these areas. Let's see if we form some kind of a support where we can maybe come right back up to this resistance and do something very similar that we did over here, right in this area over here to the left, right? Anything in here, I'm looking for price to come up, and you could probably grab a couple scalps up here, a couple jabs at the market to take price right back up here, and then you could take price right back down to the support at 149,400 to retest these lows. So we'll get rid of that. Moving into the 4-hour, we are forming this support right over here. Now, this doesn't mean buy. You need some kind of a support to form, a new high to create, and then you get that support forming, and then we come right back up. That's what I would personally be waiting for. But right now in the 1-hour, you got to wait for a price to break this area right here, right? I'm not looking
literally market collecting orders right in front of us right now.
Exactly. We're in this downtrend over here, respecting this area right over here. So it's hard for me to take any buys below this trend line over here, right? But what you could do, if you do want to take buys and you think price is really going to react to 149,400, wait for the retest right here. Wait for candles to close bullish, a strong bullish candle on the 1-hour, the 30-minute, any of these higher time frames. You get the retest over here and get candles forming in your direction. You got a clean move here that you could either take price right back up here or to this resistance right over here, because you got plenty of pips that you could play with. You got about 56 here, and you probably got another 40 above that.
I would go as far as saying like maybe even 150, 200, because if you put like a horizontal line at 150, 200, and then go onto the 4 hour and just look to the left.
Wait,
We're
152 right here?
152, 150, 200.
Oh, 150, 200.
Yeah.
Okay, got it.
So just a horizontal line on 150, 200, and then let's look to the left on the 4 hour time frame.
There you go. Always looking left.
Yeah, on the 4 hour time frame, or
Right
even
in
on the
the middle.
hourly. It's gonna look a
That's
little
what I
bit
was
cleaner
looking
on the
at this
four.
morning. This area right here.
So zoom out even a little bit more because based off the 4 hour, this look, there you go. We're this is all consolidation. This is all market collecting orders. So on the 1 hour it's gonna look a little bit messy, but same exact thing, right? This is all market collecting orders. So now this is when you start narrowing down. So I'm sure you guys like heard us a lot say like, narrow down onto the price action. This is where I start narrowing down my price action, right? Especially around these areas. So I would say as far as like you don't really have a buy opportunity, a clean one at least that you can turn like your scalp into a swing, unless you clear out 150, 200 and above. This is
Exactly.
all just look at the messy price action that you have here, right? And you've had a massive sell off on the daily time frame, a massive sell off on the 4 hour time frame. Like you need to let the market kind of collect orders and then continue on whichever way that it wants to go.
Exactly. I couldn't have said it better myself because, when I'm saying over here that you could possibly take a buy, that
Hmm.
doesn't mean, that buy is going to turn into an intraday trade or a swing
Right.
trade. This is that situation where you guys are taking scalps and you guys have to plan these trades out where you know exactly what you're going to do in these trades, where it's
Hmm.
not like, all right, here I'm at 10 pips, I'm going to secure 10 pips. But wait a minute, I think this could turn into a swing. So I'm just gonna hold on to this and see if you have your target, just close the full thing, especially if you're
Hmm.
trading against the trend over here. If you think price can come up to, let's say, 152, 200, like Sharma just pointed out, close the full thing right there. And then
Hmm.
wait for price to form that resistance to come right back down. Now, if you wait for price to close below 149, 300, or 200, that's where you take your swing and you can, ride this all the way down, just like we did this morning, right? We had a
Absolutely.
nice move today.
And then before we move on to gold, I had one thing to point out. If we go up to the monthly time frame, and then you're going to see the same exact thing on like all the lower time frames, and then just zoom out. There we go, a little bit. So the level that I'm personally kind of curious about, not even like worried about, is mostly the price action or the consolidation that we've been seeing right into this area specifically. So
You
it
want me
seems
to zoom
like
in or out anymore?
just zoom in a little bit. I
Okay,
think it would be a little bit easier for
just tell me
everyone.
when.
There you go. That's it.
Cool.
So right into this price action here. Oh, actually, give me one
A
second.
little bit higher.
Yeah, a little bit higher, right about here, right? So this is an area that I'm interested in because if I just like, make that box to the left a little bit, then I see that how price has rejected this level either as a support, resistance, or even consolidation in the past. So right here, you got that resistance, a pullback support, and then a massive bullish push up, right? Clean buys. Same thing here, resistance, and then we have consolidation. So what I'm kind of thinking when I'm looking at this level is it seems like down here is more like a liquidity zone. All this like consolidation that's happened to the left, right? And so now as price started pushing up and kind of cleared out that area, that was massive bullish push up. We never had a correction down here, right? Not like a clean bearish bottom wick rejection, something like that, that would show us that okay, we grabbed liquidity and we're continuing up. We just broke past all these levels, came back up to the level that you pointed out here, Stefanos. So what I'm thinking now is there a possibility we're going to come back down, right? And we're going to have fundamentals supporting this, maybe increasing of Delta variant cases, and then more fear market or labor market. It's picking up, but not at the level that's going to help the central bank increase the interest rates, and then tap into this area, maybe create a support down here, test the structure lows, and then finally we start to see some more positive fundamentals and we start to push up again, right? So that's the analysis that I'm kind of going through in my head after I'm looking at okay, where's price sitting right now?
Yep. And it's
But,
pretty interesting that after we created this movement up, to
mhm,
create this high up here, we ended up coming right back down to retest the previous lows to the
yeah.
left, right? And it looked like we wanted so bad to come right back up and retest these highs. But that's when not Brexit, but that's when COVID
COVID.
happens, and we came right back down, and then we made our move all the way right back up,
Right.
right? So now, like we retested these highs up here, so now it's like, all right, buyers are coming out. You know, a lot of big banks and everything, and then obviously fundamentally, there's a lot
Mm-hmm.
going on as well. But you know, we're now correcting that move, and exactly what Sharma said, we could be coming right back down to this area, form support, and continue right back up. And that's
Yeah.
when you get that hawkish sentiment coming out of Great Britain.
Mm-hmm.
And that could be in the next month or two, where it's like, all right, inflation's starting to really pick up. We need to get a
Yeah.
hold of this thing and
I
do what
would
we
I
can.
would be really watching quarter 4 to see, what they have to say at that time. So at least at this point, things just start to open up in quarter 3. They have the next or the current quarter to kind of figure it out. And then in quarter 4 is when you start to see that little bit of sentiment coming out. We're scaling back a little bit, but we're not increasing the interest rates. And then maybe going to next year by quarter 2 or something like that, we'll start to see increase of interest rates.
Absolutely.
Yep.
So, we ready for gold?
We're ready for gold.
Actually, I'm looking at it on my other screen over here, and I just missed a trade on gold, but I'm going to point out exactly, how I would have taken that trade. So
Hmm.
maybe that'll help you guys out as well. So, obviously, again, you guys watch our breakdowns. You guys know how we look at gold. We've been in this massive bullish run over here. A lot of geopolitical fears with China, with Iran. You got COVID over here as well. But a lot of Iran stuff, and then obviously Trump coming into office as well, really catapulted gold up here. And then obviously COVID came right back up to 2074 to create these historical highs. And then we entered this corrective phase. So right over
Hmm.
here, just gonna mark that off. We've been in this bullish run over here since this consolidation area over here to the left.
Hmm.
Right, we were in this consolidation to the left. We broke out of it, and ever since then, we've been in this bullish trend, correcting every now and then. But now we're holding support right over here as well after retesting 1680. So
Potentially another consolidation.
what, 1680?
No, a little bit higher than that where we're holding the support.
Right over here.
Yeah, so if you mark off that and then
You're
I'm pretty
saying
sure you're gonna yeah, so if you mark off that level and then the resistance level, which I'm pretty sure you're gonna mark off, around 1900,
what to
potentially
this?
another 1900, yeah, and then potentially another consolidation like we saw previously.
Yes, exactly. So we ended up doing the same thing that we did over here to the left. We pointed out every time.
Yeah.
We made these historical highs, corrective phase, coming right back down to retest these previous lows. We come right back up to retest the previous highs. Then the economic recovery started to take shape, right? So what are we doing over here? Historical highs, corrective phase, retest previous lows. We formed a double bottom at 1680. We come right back up to retest these candle body highs. To the left, you can see them on the lower time frames. And then all of a sudden, you get that sentiment out of Powell, which took us all the way down on gold, saying that they may be increasing interest rates soon. Looking at the weekly over here, again, 1680, very critical zone over here. We ended up forming this double bottom. You can see it better on the daily, but we've been in that bullish phase ever since then. But before we did that, we were respecting this channel over here.
Do you think that to a certain extent we probably still are? Because all price did is come back and test that high
Do
and
you
then
think
pull
we're
back down.
still? Do you think we're still what?
It's still in that kind of a bearish trend since price just came back up and retested it. It could
Yeah,
be a
we.
simply a
You're saying
push up
like
and
this?
then but I would do it like off of the bearish candles wick, top wick.
Um, right over here.
Yeah.
Okay. Yeah, that makes sense. I mean, for months now, we've been looking at this channel that we were respecting.
Yeah.
We finally broke out of it with, what was it? The geopolitical issues with
Mhm.
Israel and Gaza.
Yep.
And then that's when Powell came in and started talking crazy.
So
But
that's where I see the two scenarios. This is the one of them, and then the second one is, we could be in this bearish trend, collect orders, massive push up, right, to grab that liquidity, and all we're doing is just correcting that bullish move to like slowly move up. Either of those scenarios.
And then obviously you got the Delta variant going on right now. That's what's pushing gold up, as well as the inflation fears, which is probably the main mover on gold over here. But looking at the lower time frames over here, and we're missing this is a great entry right over here. I missed a scalp to the left that I'm going to show you guys in a second, but we were in this consolidation area, right? After coming all the way down, correcting that move, we come right back into this area. We consolidate a little bit, and then we exited it, but we ended up consolidating a little bit before exiting that area. So we ended up coming up and creating this new high. This is great market structure right now. Creating this new high, we come right back down to tap this area where we previously rejected multiple times, 1, 2, 3, 4, 5 times over here on the daily. So 5 days in a row, we come right back down to retest that area, and we end up closing like a doji candle, but flipping bullish. This candle created its bottom wick already. Now it's passing the high of that candle. So this could be honestly a nice entry with the fundamentals behind you. Something like this. You guys may see this a little bit too late, but 84 pip stop loss. We should be coming up to retest these highs right up here, this previous wick. But looking at the lower time frames, that's not the trade I was talking about. We were, after creating these highs up here, ended up entering this bearish phase. After retapping this area, we ended up breaking out of it, creating a support and breaking out of it on the lower time frames. But right now we're breaking above these previous highs right over here. Tapped multiple times over here, right? Now we're breaking above it, which gives you more confidence that price is going to come right back up and retest these highs again with the fundamentals behind you. It's going to be a nice move. What I was looking at not this morning, but tonight earlier, been respecting this bullish trend, creating these higher lows. We come right back up to retest these previous highs over here, come right back down, create a new support. Very simple. Creating a new support over here, come right back up, create another higher low, and we continue right back up. Beautiful entry right over here. Would have been a higher risk, higher reward kind of an entry, just because we have this resistance here. But knowing the fundamentals are behind you, that should give you confidence that we're going to continue right back up. Maybe I can.
You have the resistance, and you have that little consolidation too. So if you just like kind of try to lock in that price action, then you see that there's an entire consolidation right into this level. The price breaking out of consolidation, another confluence right there.
And look at this. You guys got a nice move right up to this area right over here on the 1 hour. And that's about 92 pips. So you got about 100 pips right there that you could grab. So maybe you get some sort of a retest over here before you continue right back up. Looking at the 30-minute, I love how this candle exited this consolidation over here. We come down to retest. This candle never breaks the low or never comes right back into that range. It just retests those previous highs. Then we pass the high of that candle, anticipating that price is probably going to come right back up to 18, 15, 800, right? But looking at the 15-minute, I love these little entries right over here. As we pass the high with some volume at 9 o'clock, right over here, retesting this area with a wick to fill. I love these wicks on gold where, the candle closes bearish, but we closed above this resistance in a way. But knowing that you have the volume and the fundamentals behind you could take this up. But I was looking at the 5-minute over here and the way the 5-minute closed. Enter after this 5-minute close right over here. Could have grabbed about 15 pips right there so far. But let's see if we get that retest, get another support forming, and then you could possibly take this up for an intraday trade to lead into tomorrow morning to retest these highs up here.
Yeah, absolutely.
Anything else?
No, so we have like, great opportunities lining up. You have the fundamental side also lining up now with the technical analysis that we're seeing from like higher time frames and down. All it takes now at this point is, be patient with it, let the markets breathe. You are going to see opportunities what it seems like, from the fundamental side and the technical side. There probably are going to be opportunities in every session. It's Asian session right now. And there you go. Like Stefano's just pointed out a couple of different entries that we could have taken on right here on gold. So you are going to have opportunities regardless of the session. Asian session tends to be like one of the slowest ones. People tend to hate trading Asian session, right? But
It's just a pain. There's not much volume.
yeah.
Like typically this move is only 50 pips right here on gold. I mean,
Hmm.
actually, you know what? This is the 5 minute. I'm forgetting I'm looking at the 5 minute, but what I was pointing out over here is that we came down to retest this previous area, creating the support. We come right back into the range and we close right back in here, creating a
Hmm.
fake out right here. So as soon as this candle creates its bottom wick and then flips bullish, this is personally where I would have entered as we flip bullish, passing the high of that candle with that 9 o'clock volume, anticipating price to retest these highs and continue right back up to the
Hmm.
previous resistance. So that's
Yeah.
that's some that's a way that you could have gotten this trade right over here.
Hmm. So there's just going to be great opportunities this entire week. Just
Oh yeah.
be patient with it, right? And then wait for your confirmation across time frames, and use the confluence, use proper risk management too, right? So there's a lot of people. I've actually gotten messages lately where people tell me that I had one loss, and then to try to make up that loss, they increase the lot size. And so I just ask him, I'm like, why would you do that? Like, you should be take a step back, take a look at, why did you have the loss, and then go in with the same exact percentage, right? Think of it like a business. If you made like a $50,000 profit, $20,000 profit, are you just gonna go all in, or are you gonna try to split that up into like different deals that you get, right?
Yeah.
So use the proper risk management. But that's about it. So have a great week and use proper risk management, wait for your confirmations.
Yeah,
And that,
and like Sharma just said, guys, stick to your plans. Most people, they'll write out a trading plan if they even do, and they'll deviate from it within a day or two. Right?
mhm,
Stick to your plans. That's the secret. That's why most people fail at this. So stick to your trading plans. Stick to what you say you're gonna do, and just do it.
absolutely. And as always, feel free to reach out to both of us if you guys have any questions, and we'd be more than happy to help you out. For you, still TikTok and YouTube. Is that correct?
TikTok, YouTube, and then also I'll just put this right here. Somebody actually reached out to me and joined my group today because we've been emailing back and forth. He got my
Hmm.
email. So this is actually my email if you guys want to reach out. So just
There you go.
copy that, do whatever you'd like. But
Yeah.
shoot me an email if you like, and I'd be certainly happy to help you out.
And then TikTok is just Stephanos FX.
Yeah, Stefanos FX.
All right.
And that's about it. And then also YouTube.
Feel free to reach out to him and just ask any questions. Both of us, we're more than happy to look at your analysis and help you out. Other than that, have a
And
great week, everybody.
have a great week, guys.